Hello and welcome to Stocks University. My name is Sebastian. You're going to be hearing from me quite a bit if you're a part of the Stocks Uni family because I work with everyone on a very personal level. Now, your bread and butter, of course, is going to be these video lessons that I have made for you where I break everything down in a way that is very simple. Now, if you're watching this as a part of the free intro lesson on the website, I highly recommend that you take advantage of our $5 first month so you can access the rest of the modules, access the trades that I call out, and basically get access to everything for only $5. It's very low risk because I want you to have the opportunity to see that this works for you, see how I'm changing the industry, and really giving people access to something that they haven't ever had access to within this industry of trading. So if that's something that you are interested in, feel free to scroll down, sign up on our website, and you're going to get access to absolutely everything, as well as the ability to speak with me directly for any questions that you may have whenever you have them. Now, we're going to be diving straight into the first lesson here, and we're going to be speaking on some pretty basic things just to make sure that we're on the same page and give us a strong foundation. Couple things that I want to get out of the way. We trade exclusively within the stock market. There are other markets that you may have heard of, like Forex or crypto. Personally, I believe that they are not very consistent. And if you are looking for just legitimate, consistent growth to your cash and numbers that you can actually replicate on a regular basis to fuel your finances, there really is nowhere better to go than the stock market. Statistically, it is where most full-time traders and millionaires work in. It's the stock market. We don't really do other stuff. There are people that are very successful on crypto and Forex, but it is not only much harder, but much less consistent. Now, I'm not saying this to thrash and other methods of investing. I'm simply telling you the facts. Forex is a lot more volatile and time-consuming, while crypto has a little bit less of a consistent basis for its movements. If you're coming to me from the same background as many of my clients that have come to me because they tried crypto or Forex first and they lost a lot of money, I'm telling you that you're in the right place because all the things that you learned in the world of Forex and crypto does apply to the stock market. And it actually applies a little bit better because our markets tend to move a lot more predictably. So with that out of the way, let me explain to you what we're doing here in the stock market. Because I'm not just talking about long-term buying shares, I'm also talking about trading short-term in the stock market, which is very, very profitable, significantly more than Forex, and potentially even more than crypto a lot of the time. The real strength, of course, is in the consistency and ability to replicate these trades very, very repeatedly. So I'm going to be starting here with a little presentation that I have, especially for those that are brand new to all of this stuff. I'm going to break it down in a way that's very simple to understand. All right, so the stock market, what are we really doing here? Like I said, within the stock market, this is the easiest way to invest in just about any company that you can imagine. So Apple, Nike, Starbucks, Microsoft, Nvidia, those are all the things that we are investing in. So what does that mean to invest in these companies? It means that you're buying a share of them. So let's say you want to buy a share of Apple. Apple costs $100 per share, let's say. And then you're buying that share, you're holding on to it. Next thing you know, in a few months, Apple's worth 170. You would have made $70 in profit off of that share. Of course, let's say you buy more shares, you would make a lot more profit. So instead of buying just one, maybe you bought 10. You put $1,000 into Apple, and instead of making $70, you made 700. Right? That's a vague example of what investing is on the long-term scale. We'll be speaking about what short-term investing can do in the stock market, and it is significantly more than that. So let's continue here. A lot of you guys may have already taken a look at stocks before and looked at the charts and seen how the prices are always moving up and down. But what does that really mean? What affects the market's prices and how can we profit from that? Okay, so a lot of people tend to be under the misconception that what moves the price of these companies is how the news are moving, how the company's performance is, whether it's going up or whether it's going down, and a million other things like that. But that is actually not always the case. As a matter of fact, those are all factors, but they're indirect factors. Yes, if the company has good news, the prices is probably going to rise. If it has bad news, it's probably going to drop. But why does that happen? Well, the only direct factor that causes the market's price to move is how many investors are buying or selling their shares. That's it. So if a lot of investors are buying, investors meaning literally people like you and me, right? Let's say that we like what we heard about Apple and we want to buy a ton of shares, the price of Apple is going to go up. It's like supply and demand. The more people that buy, the higher the value goes. So awesome. What happens if investors like you and me hear that maybe Apple's new product performed terribly, so we want to sell our shares? Then the price of Apple will drop. But the news, the company's performance, all of those things are indirect factors. The only thing that matters is whether investors are buying or selling. So, what does that mean for you? You as a trader, you and I, what we really need to do, our only real job here is to get in the heads of other investors, right? All that we care about is what other investors are doing. If they're buying, we want to make sure that we're also buying. If they're selling, we want to make sure to also be selling. That is the only factor that impacts these prices directly. Of course, that is easier said than done, right? We can talk about, oh, if everyone's buying, we want to buy also, or if everyone is selling, we also want to sell. Sure, but how do you know when that's happening? We will be speaking on that a little bit later. Before we do, I want to speak a little bit about what types of investments are available to you within the stock market and what we do specifically. Now, we can break this down into two big subcategories, and that is going to be long-term and short-term. All right, so starting here, we got this chart pulled up, and you can feel free to screenshot this or take the time to look over it. This describes the big differences between long-term and short-term. So what I described earlier about buying shares of Apple and holding them on for as long as you want and maybe selling it at the end of the year or at the end of the decade or whatever you want, really, that's all long-term stuff. Trading long-term in the stock market is very slow and very steady, and it's effectively zero risk if you do it properly. It should only be growing your cash over the time, but like I said, you have to know how to do that properly. So here's how I like to describe long-term. A lot of you guys are probably here because you want to actively impact your finances. If I'm being totally frank and transparent, you're not going to get that done with long-term investing. Long-term trading, it's a lot more like a better savings account. So instead of having your, let's say, $5,000 or $10,000 just sitting in your bank account doing nothing, where really it's being eaten alive by inflation, maybe instead of having your thousand just sitting there rotting, you want to have it in something long term. Like maybe you want to buy $1,000 worth of Apple or $1,000 worth of Nvidia or whatever it may be. Okay, so now instead of losing value over time because of inflation, now it's gaining value. In other words, long term is just the proper place to put your money when you're not using it. Me, as someone that does investing of all kinds, truth is, if I have more than $5,000 in my hands at a time, I just dump it into whatever investments I can find because I'm not touching that money anyway. And I don't want it just sitting around doing nothing when it has so much potential for growth. So speaking a little bit more about long-term, your big focus with me isn't really going to be your long-term stuff. Module 5, you will be learning how to properly manage your long-term stuff and do it in a way that basically minimizes your risk to zero and maximizes your profit quite a bit. And you can even get paid dividends over time. But like I said, not the main focus. And the reason why, let me explain how long-term works. When you're buying shares of a company, so let's say, again, Apple. Let's say Apple costs $100 per share. And let's say in a year, Apple goes up. Let me go ahead and just calculate that real quick. I'll actually just give you guys like a real example here. All right, so last year, Apple went up 33%. So let's just say, a share of Apple costs $100. You buy, let's say, $5,000 worth of shares, and it goes up 33%. So it goes from 100 to 133, let's just say. You would have made $33 per share if you had, let's say, again, 10,000 shares of Apple or 1,000 shares of Apple. You would have made $3,300, right? Over the span of a year, that's pretty cool, I guess, but it's nothing really life-changing. And again, it's very expensive. Doing long-term to a point where it's very, very profitable, it's going to take a lot of money. And I'm talking about tens, maybe even hundreds of thousands before you start to see some really significant return. Now, there are ways of buying shares that are a lot more profitable, but frankly, if you're looking at trading or buying shares for profitability as opposed to consistency, I would just rather do short term, which we'll speak about in a second. But that's pretty much just to give you guys an idea of what long term looks like. It will grow your money. It's going to be slow and it's going to be over time. And most people will not sell their shares for many, many years. And that should be what you do because a lot of these companies, for example, Amazon over the span of 10 years made, I believe, what was it, like over 500% or something in profit. So a lot of these companies tend to blow up and make a lot of profit for their investors. So really the best thing that you can do with long-term is just have your money tied up in there, let it grow over time. Of course, you can sell it whenever you want, but it is in your best interest to just hold on to that for a while, right? Long term, it's a better savings account. Short term, now let's speak about this and how this actively impacts your finances. So, as a part of Stocks Uni, with me, we mostly focus on the short term aspect because, like I said, long term, it's very non time consuming, it's very inactive. You're just buying it and just kind of holding on to that. Short term, it's a lot more actively managed and significantly more profitable, as well as having an active impact on your finances today. In the world of short term, where it would take you, let's say, a year to make 33% profit on Apple, you can make 40%. That's what our profit usually looks like. You can make 40% profit on a company like Apple in the span of just 1 to 5 days. So short term trading is significantly more profitable, faster. You buy, you sell, and the money's yours, and you can do whatever you want with that. And more often than not, what you should do is reinvest it. And I'll tell you guys why in just a second. Short term, faster, a lot more profitable, but I'm going to be transparent with you all because that's my biggest priority. That's really the whole brand here at Stocks Uni, is that transparency and authenticity. I pride myself in showing you guys the best, but the most realistic numbers that you will find anywhere in the world of investing, right? I don't sell you guys a fantasy of I'm going to make you a millionaire overnight. Absolutely not. But I'm going to show you right here very easily how you can make an extra $30,000 this year or $60,000 if you stick to the game plan that I have for everyone. And I have plenty of students living that reality today. However, in order to get to the reality, we have to beat the fantasy down. So let me be very realistic with you guys and kill all this optimism that you have floating around about I'm going to be a millionaire overnight. Let's get that out of the way. This is risky. Trading short term carries significantly more risk than long term. However, the mindset that I want you guys to get out of is running away from risk. Stop doing that. No one in the world of entrepreneurship, no one in the world of any amount of success ever achieved it without risk. And as a matter of fact, working a 9 to 5 is just about the riskiest thing you can do in this economy. Wherever you look, everyone here in the United States is doing something entrepreneurial, and you need to be on that ship as well. Investing is one of the least time consuming and most effective ways to get on that boat. So risk isn't something to run away from. It's actually something to manage. And that is the key that most millionaires won't tell you. They will just tell you, hey, work for me, I'll pay you a salary, and we'll do this or that, whatever. But the truth is, the key to success comes with managing risk. So we'll be speaking on that a little bit later, but I want you to know that whatever is risky, it can always be managed, and the game basically depends on how well you can rig this in your favor. And I'm going to show you the strategy that I developed here over nearly a decade in the market to consistently rig the game in my favor and always make me profit no matter what the market conditions are. So you're going to be learning a lot of risk management here with me. I just want you to know ahead of time that this is a game that we're playing together, and I'm going to show you how to beat it every single time, but it does carry risk. Stop running away from that. Now, of course, the world of short term also carries the need for a higher level of understanding of this stuff. That's also part of my job. I'm going to teach you that understanding so you can leverage this stuff for your finances. All right, so now what I want to show you guys is how you can use that exponential growth to your favor, doing something called compound interest, which is just basically reinvesting your profits. So I'm going to show you guys what really is possible in the world of short term, right? So I just told you right now that no, this is not going to make you a millionaire overnight. I'm going to show you what it can really do. And these are the realistic, but very, very positive numbers that you can see here when you are investing in the short term and actively managing your money properly. All right, so very briefly, I want to show you this chart here to explain what short term can really do. So these are our actual numbers here at Stocks University, right? This is what we really do. So first and foremost, this is risk management as well. This is how we get to see these numbers very reliably. First off, and the most important thing with trading is how accurate are you? How many of your trades are hitting, basically, right? We have anywhere between an 80 to 90% win rate, which is already fantastic, right? If you're winning 8 to 9 out of 10 times, that's cool because that means that you're taking 9 steps forward and 1 step back. You just net gain 9 steps. That's very, very good. That means that you're over time, you're just growing your cash, even through the losses that we occasionally take. Inevitable, by the way, that happens in the market. You will take losses. It's a question of learning how to manage that properly to, once again, rig the game in your favor. So we're sitting at an 80 to 90% win rate. That's already good, right? But how do we take that a step further to even, really, really get this stuff working for us as opposed to us having to work for it? Well, what if I told you that those few times that you lose, you're only losing 15%? We have a 15% maximum stop loss on our trades, right? And we usually make anywhere when we do profit. So the 90% time that our trades are hitting, we're looking at a 40 to 80% profit margin. So you're losing one, maybe 2 out of 10 times. So maybe 15 to 30% loss, and you're being successful 8 to 9 times. So nearly 400% profit on a minimum side if you are following the instructions that I send out. Not just that, but our trades tend to last between 1 to 5 days. So they're relatively calm, easy in and out stuff. It's just a question of following the blueprints that I send out in the Discord chat. So this chart that you see right here is the example of compound interest that I mentioned earlier. So let's say you start your account with $1,000, right? And you want to trade with 500 at a time to start off. Okay, cool. Starting with $500, this chart here shows us what we can make over the span of 10 trades with 50% profit each time. So if we're usually profiting between 40 to 80%, 50% profit is pretty modest. So let's see what we're looking at. This is compound interest. This is that exponential growth that I talked to you guys about that is possible through short term. So watch this. You're 500, you made 50% profit, so it turned to 750. Cool. You made $250 in profit. Nothing crazy, but it's definitely a little boost, especially if you made that over 2 to 4 days. I mean, that's pretty good, right? Nothing to tweet about, whatever, who cares? Next, you're 750, you reinvest that and made 50% profit and turned it to 1,125 bucks. So all right, still nothing too crazy. I mean, you did double your account. That's pretty cool. And now instead of profiting only 250, you profited 375 on that last trade. So 750 profited 375. So you add those two numbers and it equals 1,125. Pretty cool. Now the next trade, and then the next one, you see things really start to ramp up. So instead of just making, 250, now let's say you reinvest that, you take 50% profit, and now you're here, $1,600. Still, nothing too crazy, but watch this. We're only on trade number 3. Let's go to trade number 6. 3 more trades, and let's look at what we're looking at here. $5,000, nearly $6,000, and you made almost $2,000 in profit off of a single trade. That's pretty cool. Let's go 3 more trades into the future. Trade number 9. Wow, your $500, 9 trades just turned into $19,000. And on the last trade, 50% profit, you just made nearly $7,000 over the span of 1 to 5 days. One more trade, $30,000 is what you're looking at now, right? Okay, I'm not showing you guys this by any means to get you excited. The biggest thing that you need to do when you're investing is to have a level mind. I'm showing you guys what numbers are possible. But keep in mind that you're not going to jump into this, make 10 trades and make $30,000. That is not the case. Keep in mind that this chart right here, and I'm just being very transparent and authentic, this chart does not show you that 10% of the time that you lose. It doesn't show you that time that instead of maybe taking 40% profit, we have to get out a little bit early and only make 20% profit. It doesn't show you that stuff. You can expect to see this over the span of a few months, maybe 6 months to a year. These are just the cold, hard numbers. These are the real, authentic numbers. I mean, you can run the math on these. This is our game plan, right? I just want to make it very clear. Say something to you guys that you will not hear in this industry, because all that you hear in the world of trading is, I'm gonna make you a millionaire overnight. Look at my car. Most of the time, these guys will literally just rent cars to post on Instagram and make a bunch of BS ads just to get you excited to buy their $5,000 course. No, I'm telling you guys the real stuff. This is the real climb, right? And this is probably going to take you a couple months to achieve, but that's still really, really solid. And I promise you that any numbers that anyone promises you better than these, it's not realistic, and you're most likely going to have either a very difficult time or just straight up be lied to and scammed, right? So my mission here is to fix the industry and be very realistic and transparent with you guys. All right, so back to our main presentation here. We already spoke a little bit about long-term versus short-term. Let me go ahead and share that. We already spoke a little bit about long-term versus short-term, so that's cool. Let's talk a little bit about what we're doing specifically in the world of short-term. So you already know how much profit you can make. You already know how lucrative it can be if you do things right, which again, I'm not expecting you guys to be experts in the market. I'm expecting you guys, and you're going to be learning about this over the span of modules 2, 3, 4, 5, and 6. Yeah, you're going to be getting a lot of knowledge, but the biggest thing that I teach you at first is just how to follow along with the trades that I send you. So you don't have to be an expert to see those numbers. You just have to be an expert at following along, and that's not difficult. You're going to be sticking to the numbers that I sent in the Discord chat. You're going to be following along with the trades. I text out exactly when we're buying in and selling out. Entry, exit, take profit, just about everything I'm texting to you guys to make it very easy for complete beginners to follow along. And in case you're wondering, yes, I do have some students that are literally 2 weeks in, already seeing a couple of $100 coming in on their first month. That makes me happy. That is literally my purpose. And it is not an exception. That is our norm here at StocksUni.com. It's part of the reason why I give you guys a $5 first month so that you can see these profits before ever having to pay me anything. I don't believe that you guys should be paying me before you pay yourselves. And I definitely don't believe that you should be paying me out of pocket. It should only ever be out of profit that I help you make. Otherwise, what are you really paying for here? Right? So it's also part of the reason why my monthly fee is only $50 a month, because I don't want to take any of your profit. I don't want to be terribly expensive. I want this to be accessible for everyone to open these doors. So I'm going to tell you guys right now what I'm doing specifically in the stock market to trade short term, and that's called options trading. So you may have heard of this before. Again, this is the most reliable method of trading that you will find. No matter where you go online, you will see that most millionaires and full-time traders do stock options. So stock options or options trading, both mean the same thing, is just a way to leverage the long-term, steady, predictable consistency of the stock market to profit on the short term. I like options trading very much because it's very flexible, and no matter what the state of the market is, no matter how crazy or how bad things are, we're always able to profit, and I'm always able to tailor my options contract to be exactly how I want it to be. That sounds confusing. That sounds scary. Don't worry about it. I promise it's super simple, and you're going to be learning about that throughout this module. But let's just explain this a little bit more. So options trading lets me buy contracts for the short term within the stock market. And there's actually two contracts that I can buy. Not only are there call contracts, which is your standard stuff, right? So what do you guys already know about the stock market? Oh, well, you want to buy low and then the market goes up and then you sell up here, right? That's what you guys know. So let's say Apple is coming down, it's at a low point, and then you want to buy in at that low point, let it go up, and then you want to sell, right? That's what you guys know about the market so far. In the world of options contracts, I can do that. I can buy a call contract, like I'm circling up here, and that is a type of contract that makes money as the market goes up. So if I buy a contract of Apple as a call and the price of Apple goes up, I make my money. I can make my 40 to 80% profit. So my $1,000 turned to 1,400 or 1,800, whatever, right? Cool. But what happens if the market's going down? What happens if, what we saw happen during COVID is happening and everything is crazy and all over the place? Well, guess what? There's actually a second type of contract that you can buy in the world of options, and those are puts, which actually profit as the market is going down. So let's say I buy a put contract and then the price of Apple is doing nothing but dropping. I'm actually taking profit there. I'm making money off of that. So that's part of the reason why options trading is so flexible, because I can profit pretty much no matter what's happening. Whether it's going up or down, I can make my money on this stuff. Yeah. So this is what that looks like, right? This is that flexibility. And that is what allows me to basically always stay in the green. Okay, so let's take a look one step further as to how do you actually know when to invest? Because I've talked to you guys about a lot of pretty stuff so far. Now, it sounds very appealing. We make all this money, sure, but how do you actually know when to pull these triggers? How do you know when to buy, when to sell? In order to explain that, let's go one step back. What impacts the stock market's prices? Well, we know that it's investors. If everyone is buying, the price of a company is going to go up, and if everyone is selling, it's going to go down. Bam, simple. Okay, how do we know what investors are doing, right? If all that I care about is what investors are doing, if I don't really care that much about the news, if I don't care about anything else, what do I really need to see? Guess what? There are charts that literally tell you when investors are buying and when they're selling, so that you get an extra competitive edge to follow along with that and buy in whenever they're buying and sell whenever they're selling, right? So really, really easy stuff. Stock charts are the key to trading, especially short term. And we're going to be going over a very basic example as to how to read them. So These are the stock charts that we use. I like TradingView. You can use whatever you find, but it's going to be a lot easier if you use TradingView. It's a free platform. I'm not affiliated with it or anything. I just really like it, and it lets you see these charts for free. Which is, again, I don't want you guys to have to pay for anything that you don't have to, right? So TradingView lets us see these charts here. Specifically, these are called candle charts. They're called candle charts because the bars kind of look like candles. And the reason why we use these is because they're very, very informative. All right, so let me explain what we're seeing here on very, very simple terms. All right, so let's go ahead and just zoom in on this little chart here for a second. First and foremost, if you get confused, all you need to know is green means up, red means down, right? So even though you may think that you don't know how to read this chart, I promise you that you do, right? Because here's all that we're really looking at here. This is it. Okay, right here it goes down, then it goes up, then it goes down, then it goes up a lot. That's all that's really happening, right? So even though all the lines don't make sense yet, you can get the general gist of what's happening here on this chart. So this company that this chart represents, this is Bank of America, right? This is Bank of America here, BAC. And we can see here very clearly that, yeah, that's pretty much what's happening here. It comes down, comes up a little bit, comes down, and then it comes up a lot. So what could I do here? I mean, just from showing you guys this brief example. Well, I could buy a call contract right here and then let this go up. And then up here, I would sell it and take my money. And this is easily, I mean, maybe 60, 70% profit. So I put in 1,000, I walk out with 1,600, right? Cool stuff. All right, awesome. Let's take it a step further. And again, remember, if you get confused at any point, just remember, general gist, red means down, green means up. That's it, okay? Let's talk about what these candles even represent. Each and every one of these candles simply tells us how the price of a company changed within a certain time frame. We usually have it set to 1 hour. So if there's a green candle, that tells me that the market went up during that hour. So let's say Bank of America, which is this company on this last green candle right here that I'm circling, it went up during that hour. So maybe this is from, I don't know, let's say 1 p.m. to 2 p.m. So it went from $30 and about 22 cents up to $30.32, right? That may not sound like a lot, but remember, even though it's only going up by a couple of cents, we're aiming to make between 40 to 80% profit. Don't focus so much on the dollar amount that it's going up. Focus on the proportions, the percentage that it's rising. If that's confusing, all you need to know is no matter how expensive or how cheap a company is, we're aiming to make between 40 to 80%. Back to the chart, right? So green means up, red means down. And each of these candles represents 1 hour. A little bit of background information for those who don't know, the stock market is open from Monday to Friday only. It is not open on weekends or holidays. And from Monday to Friday, it's only open from the hours of 9:30 a.m. Eastern time to 4 p.m. Eastern time. So there are only about, what is that, like 7 candles in a day? And then the next day will start, right? So 9:30 to 4 p.m., that is 7 candles in a day and one for each hour. And that's pretty much what we're looking at here. So, I mean, we're looking at all these candles here, and we know that they represent 1 hour. Let's talk about the anatomy of the candles first. So let's go ahead and talk about what this means. Why are some of these long? Why are some of them short? What are these sticks that are poking out of them? And for that, we're going to use this little diagram right here that you can feel free to screenshot. So this is really, really simple stuff. We know that these candles represent an hour in the market. Now, let's say the market opens at 9:30 a.m. Eastern time. So that's going to represent open. Let's say we're looking at a candle and it's the first candle of the day on a Monday, right? So 9:30 a.m. on Monday, the candle opens at this price, right? So let's say that this is $5, right? So maybe a company, let's just say Apple, for example, is worth $5 at 9:30 a.m. on a Monday. Cool. So that's the opening price. 1 hour later at 10:30 a.m., it closes. So the hour is done. They close that book, and then the next candle will start. And let's say it starts at $5, but it closes at $7. Okay, so it went up $2 during that hour. So whenever you see a green candle, all that means is it closes higher than what it opens. And a red candle is the opposite. It closes lower than what it opens. Okay, so that's cool. Let's go ahead and go back to our chart over here. I'll erase that in just a second. We can look at these candles and kind of begin to understand them a little bit more. So, for example, we can go ahead and use just like this again. We'll just use this last green candle as an example. Let's say that this is again 9:30 a.m. Eastern time. So the price of this candle started here and it ended here at $30.32. What's this poking out of the candle? What's all this up here, right? So keep in mind that the market doesn't just move directly from point A to point B. It doesn't just jump straight from here to there, right? Maybe between that hour, so between 9:30 a.m. to 10:30 a.m., let's say at like 9:45, maybe the price of this company was way up here, right? So maybe it was way up here, and then by 10:30 a.m., it did come back down to the actual closing price. So that skinny part of the candle simply tells me what the highest or lowest point of that hour was. That's all it is. Very simple. So I see at which price that hour starts, I see at which price that hour ends, and I see the absolute highest or lowest that it went to during that hour, right? So again, let's say Apple starts at $5, 9:30 a.m., 10:30 a.m., 1 hour later, when the hour closes, it was worth $7. But maybe at 9:50 a.m., it was worth $3. So it was a red candle all the way down here, right? Or maybe at 10:12, a few minutes before the hour closed, it was worth $10 all the way up here, right? So it fluctuated a little bit. At one point, it was down here, then it was up here, and then it came back down to $7, and that's where the hour ended. Okay, so that's all that it means. And to keep it very simple, the red candles are the same thing, just backwards, but the same concepts apply. So it just closes lower than it opens, like I said. All right, cool. Let's get back over here to this chart, and I'm going to show you guys a really cool example that you can use to, again, what is our goal? To see when investors are buying so that we can also buy, or see when investors are selling so we can also sell. That's pretty much all that we're doing here, right? Let me show you guys a quick exercise, and I do want to clarify that no, this is not what we base our trades off of. This is just an exercise to show you guys a little bit about what analysis we're doing and how you can use what you just learned to begin to understand this and to start profiting or identifying opportunities. So watch this, right? What matters more than the color of a candle is actually its shape. Look at this long red candle that I'm circling right here. What do you notice about this candle that's very interesting? It has a very long, downward, skinny tail. Even though it's a red candle, what does this tell me? Well, let's break it down. We know it's red, so we know that up here at this price, this is where it opens. So again, let's say that this is 9:30 a.m. This is where it starts at about $30.02, roughly, or 3 cents. Later in the day, at 10:30 a.m., it closes exactly at about $30. Okay, so yes, it did go down a few cents, right? It is a red candle, but something else that's kind of funny is happening here. Notice how that has a really long tail that points down. What does that tell me? Let's go back up to here for just 2 seconds. Oh, that's the low point. So that's the lowest price that it was during that hour. Well, what does that tell me? How does that tell me that I should buy a call contract here? Well, it means that at one point the price was all the way down here at about $29.91 or whatever, right? This means that at one point this price was down here, but it ended all the way up here. So what must have happened to make the price increase from all the way down here? Investors must have bought a bunch of shares, right? That's the only thing that makes prices go up. So even though it's a red candle, we can see that right here, it went up quite a bit, back up to $30, right? So, okay, interesting. Now I know that there's a lot of investors buying because they made the price go back up. Even though it's a red candle, this tells me that investors basically looked at this and said, no, it's not going to go any lower. It's very cheap right now. It's a great time to buy. So they started buying a bunch of shares. Right there could be my indicator that I can buy a call contract right here and make all of this in profit. That is what's going on there. It's okay if that didn't make perfect sense right now. I'm just giving you guys the seeds so that it will make sense a little bit later. And this is just a very brief exercise to start understanding how these candles move and how they work and what it could possibly mean. In other words, the big takeaway from this is these candles let us see what investors are doing in real time. So it's a great way of knowing that, hey, I mean, I'm literally watching people buy shares in real time. So that means that I need to be buying my call contract. Let's say the opposite happens. Let's say that this were to start coming down from here. Well, that would tell me the same thing just backwards. Now it's a great time to buy puts and to profit as it's coming down. That's it. That's all that I'm doing here. So just to give a quick summary, and again, we'll keep it very simple. Green means up. If you see some green candles at a low point, it's probably a good time to buy. And red means down. If you see some red candles at a high point, it's probably going to pull all the way back down. So hopefully the candles made sense to you guys. And that example that I gave, I'll show you guys what that would look like as an actual trade. This is what that would look like. I would just buy my call there as soon as I see investors start buying shares. I will look at that red candle, I'll look at that green candle, and maybe make a decision based off of that. Of course, there's a lot more that goes into that. That is not all the analysis that we do. You're going to be learning a lot more over modules, especially 2, 3, and 4, about how we do analyze this stuff to get the most accurate trades imaginable. But for now, again, brief exercise. So you would buy a call there and you would sell it over there. And we can count that. We can count how long this is because, again, every candle represents 1 hour. So 1, 2, 3, 4, 5, 6. Over 6 hours, you made 70% profit. What some people will not see in terms of profit over the span of an entire year, you just made in 6 hours, right? So that's the power of short term. And again, the downside is it comes with more risk and active management. But we are here to teach you how to use that to your advantage and manage that and basically see this exact same results every single time that you place a trade. A quick set of questions that I get pretty often. Is this time consuming? No, this is not Forex. We're not looking at our charts for hours at a time. Absolutely not. This will actually only take a couple minutes out of your day. The only time consuming part that you have to get through with me is just watching the video lessons. But once you're through those, this stuff, I mean, I'm the one sending out opportunities. I'm the one trading, and it literally takes out of my day maybe, and again, I'm the one that's looking at this stuff all the time, maybe 30 minutes out of my day. And for you guys as clients, it should only take about 5 minutes out of your day to pull these trades, pretty much. So it's not time consuming at all. And that's pretty much what it's designed for. It's designed for passive income. All right. So I briefly want to go back to this. I want you guys to draw in your notes, because you should be taking notes. Go ahead and just draw this diagram up here and just continue to study this. It will make sense over time. It might feel a little bit overwhelming right now, but just try to understand the general anatomy of these candles so that it's a little bit clearer. And then try to also begin to understand how you can use them to better understand what investors are doing in real time and to show you when is a good time to buy or sell. To keep it real simple, whenever you see a long downwards tail in the market, what does that tell you? This tells me that at one point a company was all the way down here, but then it went back up to here, which means that there's a lot of buyers. So maybe it's a good time for us to buy as well. That is basically what I described with that red candle. Now, if you were to see the opposite, if you were to see a long upwards tail, so if the candle, let's say, looked like this instead, looks like that, what does that tell me? At one point, the price of this company was way higher, and then it came back down to here. So investors are selling a lot, and it's probably a good time to sell. That applies, what I just taught you guys, regardless of the color of the candle, right? So like I said, what matters more than the color of a candle is usually its shape, okay? Let's move on from this and start talking about some different stuff. All right, so hopefully that wasn't terribly overwhelming. Like I said, it will make a lot more sense. But what I want to speak on now, we already spoke about risk to reward. We spoke about how you can take advantage of this stuff to make it work for you. And I showed you some real-time examples of what that looks like. Now, over the rest of this module, I'm going to be teaching you guys how you can actually set up your charts, set up your E-Trade, set up your trading brokerages, and how to use them so that you can actually start participating in the trades that I call out. So if you're here as a paying member, congratulations. That's going to be your first step. We just got over some of the most important stuff, and that's making sure that you have a strong foundation and that we are on the same page. If you are here as a part of the free introductory lesson that we offer on the website, I highly encourage you to sign up, make an account with us, get in touch with me directly if you'd like. Join our Discord, shoot me a text, whatever you want. My number is on the website, and that's intentional because I want to hear from you directly, see what your needs are, see what your goals are, and show you how I can help. So feel free to use promo code STOCKS to go onto our website and get your first month for only $5. As a part of Stocks Uni, not only do you get these modules and video lessons that are very broken down, very comprehensible, easy to understand, but you also get access to me directly to help fill in any gaps in knowledge that you have. Learning, by the way, is the easy part about all of this. This is the easiest part. And once you learn it, you don't unlearn it. I don't hide anything. I don't gatekeep any information. You'll never see me charge you an extra $1,000 just to learn some of the advanced stuff. No, I'm literally teaching you guys everything as a part of this course because it is my mission to fix the trading industry and all the scam and all the scummy stuff, fix the reputation of trading, and really be someone that opens these doors for people. I understand that not a lot of you guys are going to be able to achieve expert level overnight. That's not part of the plan. I want you guys to be able to profit even as you're learning. So as a part of StocksUni.com, you also get access to our Discord chat where I send out all of these trades. We do daily meetings there as well, live, and you get access to these monthly seminars that I do that are fantastic information and a fantastic learning opportunity where you learn really advanced and expert level stuff. We also have trading bots and a lot of great tools that you can use. We have news bots, but really the main thing is the fact that I'm sending out the trades that I'm personally trading myself. I am a full-time trader, so I literally use those trades to pay my bills, and I'm sending them out exactly as I buy them myself so that you can follow along with them and basically trade them for yourself. And like you may have heard me say earlier, my packages, even the most expensive one, which is the one that I most recommend because it gives you the full access to everything as well as my personal attention, is only $50 a month. Everything else that you look at is going to be over $1,000 on the low end in this industry. And that's, again, because they take advantage of the fact that they're selling you a dream and they're selling you money. But I'm not here to sell you a fantasy. I'm here to sell you cold, hard, and real numbers and invite you to be a part of this mission to fix this industry. So for only $50 a month, you get access to everything. And like I said, your first month is only $5 because I want to invite you to test everything out for yourself and to see that it works first. Once you do sign up, feel free to join the Discord chat. Shoot me a little text letting me know that you're signed up and you will get full access to everything. I hope to see you there. Congratulations on finishing this video lesson. Thank you so much for your time. God bless, and I will be seeing you in module 2.